Hey there, partners. The question is there money in gold ETFs? Well, Kurv's KGLD fund, we're going to break it down today. Everyone, it's Doug, the retirement guy. Give you a little bit of fun on this Friday as I do this filming. Um, Love the little presentation that we put together for it. I give you a little insight from a Walt Disney ride in Walt Disney World of the runaway train. Hopefully you caught that one. But we're going to talk today about let's get serious here. We'll talk about the fund KGLD, a gold fund from Curves. It's been one of the most talked about funds that are out there. We've covered it on the channel a few times. I want to see if this fund is really worth where we're investing into. Is it the gold that you want to have? I know we've talked a lot about the round hills and the yield maxes funds, but we want to see what Curve's got under their sleeve with this one. So we're going to deep dive into this one for you and give you some information. Let's get into today's video. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. Well, the Curve Enhanced Income ETF. This is an exchange traded fund. Most invest in gold commodities. The fund is actively managed and seeking to maximize total return through investments in gold, gold bullion, and related EPSs, derivatives, and fixed income securities. I love it because the first thing they talk about, total return. As you know on this channel, we don't chase yields, we don't chase anything. We go for total returns out of our funds. So right off the bat, we'll look at the yield. We'll always look at the yield, but we always will make decisions when we look at total returns. And the yield is actually higher at 16.37%. Now, this fund came out July of 2025. So we're about, 3 months away from its birthday. So it's 9 months old. Now, the one thing I do not like about it, and I guess it's a personal thing, I don't like that we're at a 1% expense ratio already. Always seems high for something when I can see a lot of, we can get a lot of different funds out there that are paying that 12 to 14% and only giving us maybe 0.35, 0.5 at max. So it's just a little pet peeve I have of seeing that we're paying someone 1% expense ratios. So hopefully we're going to see something that makes it worthwhile to say, yes, it's worth that 1%. So when we take a look at what we have here, is they have 2.78 million shares outstanding. Now, so far, their number, because we have not hit the full 1 year, are sitting at 8.74%. So realistically, they got some ground to make up to get to that 16% that they promote and advertise. It does pay that monthly frequency. And the year to date, we've seen an 8.78% growth, which, honestly is good. But I would actually expect more from a gold fund the way gold pricing has gone. We see that it's had its growth, we've had its increases, but back in that late March and early April drop off, that's primarily because of everything that happened in the geopolitics, from Venezuela to Iran and across the board. We've seen a drop off in gold and then some recovery onto it, and you can see in this chart as well. So 8.78% year to date. And remember, year to date is only going to be from January to April, as of right now, April 17th. But I want to take a look at the bigger picture, and that is from July until today. And what do we see? Well, we see a 34.16% growth over the past, basically, 9 months. So a little bit better, stronger numbers there. The numbers also run from $24.55 as a low to a high of $43.44, which puts us $11 below the high and actually $9 above the low. So it really puts us right in the middle of the pack. So that gives you a good idea that you're running right in the middle, that there's some room still to grow and to gain, but at the same time, you're not near the bottom across the board. When we take a look at what they're investing into, well, the top three right off the bat are going to be U.S. Treasury bills. Now, what do they do that for? Well, that's because I call it resting their cash. They're going to put their money into these treasury bills. They're going to rest their cash to collect at whatever rate they're getting from, I've seen some at 3%, some 4%, some different things like that. But then what they do is they do all their covered calls. Okay, they're using covered calls on the different categories of gold. And that's where they're generating their income from. When we take a look at their distributions, it's kind of a systematic thing. And I question this one with Kurvs and ask basically, are you guys just presetting what you want as income? Because you went from 25 cents to 30 cents to 45 cents. So it's like their learning process, like a little kid learning to walk, that they started off crawling at 25 cents, then they got up on their feet and walked through it with 30 cents, and now going up to the 45 cents. If they continue at these numbers, great. I can see why they're talking about the big 16% because they're slowly gaining on their distributions. So how does that all affect into the performance? And that is, since inception, 65.22% total return. That's your distributions plus your growth factor. Because it's not into a full year, we have to look at the inception side. Overall, year to date is the best one to look at. So from January to 4/17, we're up 13.73%. Not bad. I'm impressed with that. But here's the other kicker I have. Down 3.52% over the past month. So we're still dealing with that late March and early April timeframes where we had to drop off of the political. But the side of it is a 3.5%. Is that another marking saying that this could potentially be a profit-taking opportunity? And when I say profit, is investing money into it to looking for the returns going down the path. I kind of, personally, my answer to it is it's a good shot at it. I think that's a good indicator saying that this could be a drop off or a dip that you could make an investment into. Now, why would I be excited about this fund? Well, it starts off with that year-to-date total return, 13.87%. Look at what's happened, even with the drop-offs in the year-to-date so far, so everything from January, there's been nothing dropping down to 0%. They've always been in the positive. They've always had the growth factor. Now, I know this is going to take into consideration that you're not taking distributions, but overall, you're growing your money. There's no NAV erosion here. There's nothing that you need to worry about. It's all working accordingly. When we take a look at that 1-year total return at 47.74%, boy, that is some impressive numbers. And we look at the numbers, even with the drop off, it only dropped down about I'm going to say 17 points from where we're at today. So there's some big difference. They dropped about 30% from their high point, but never down to zero. So again, another safety net that's coming to 30% drop off, you're still in a very positive. So long term tells us that it is have some long legs to run with. So is this one good for a retirement account? Well, I'm going to put it to you very clearly on this one. This is only a growth fund. Some people will talk about it and say this goes in the income category, but I'm really into this saying it's in the growth fund. If you're familiar at all with what we do in our channel is when we do things for retirement, we brought up 3-pillar retirement, which is a 3-bucket system. There's a foundation fund, there's a growth fund, and an income fund. And our growth fund is what it's designed to do is help rebuild any losses on the growth income side because you're putting everything to income. We're trying to build it up for inflation, for any mishaps. So what I would take here is why I say this is a great one for growth. You're getting a strong 8% growth so far. You're also so far that yield is right around the 8%. I would drip everything I have from the yield into the growth. So all of a sudden now we're talking more towards that 16 to 20% category, which is like you can see, year to date 13.87 or the past 12 months of 47. That would give me more potential growth in my portfolio. And that's where I would classify this one, putting it so that you can continue to grow to help with inflation and really take a look at this after 1 year, reevaluate it and say, hey, after 1 year, is it really time to keep it or to move on? But right now, I really think it's a growth fund for long-term holding. So Is there money in the ETF? Well, there is if you got a certain way you want to play it, I believe. But tell me your thoughts. Do you think this is a fund to invest into? I'd love to hear from you because I know so many people have talked about KGLD. I'd love to hear what you guys are thoughts into it. I tell you my side of it. Leave a comment down below. Ask any questions you want. Don't be afraid to hit that like button. It helps us out tremendously.
Thank you for watching. Press the